All right. Hey there. Good morning, everybody. Chris Franks with Texas West Capital coming at y'all live here just a little bit after 11 a.m. Central Standard Time on Friday the 13th, 2024. Happy Friday the 13th to those of you that celebrate. Good to see y'all checking in here. Man, oh man. So what do we got, man? We've got big tech, in case you guys have not been paying attention, and Bitcoin have been just like running. They've just been running lately, right? And so when we look at that, I know some of you guys are getting, oh, what do you mean they've been running? Bitcoin's been going, sideways around 100,000 for a few days. Well, what I'm talking about is prior to that, coming into this, right? We've got to take the bigger picture into consideration. And the important thing about big tech, especially when we look at the Mag 7, right? Magnificent 7, we heard so much about them up until about a year ago or so, because they were leading all the rally. Well, what I mean is just recently we had them 6 of the 7 hit all new all-time highs the other day. 6 of the 7. Only one that didn't was NVIDIA. And NVIDIA is still sitting right up there close to it. But Tesla, Alphabet, Meta, Microsoft, all of them, they hit new all-time highs. And so, I guess the question then for everybody is, oh my God, with tech, big tech hitting new all-time highs and Bitcoin, I don't want to use the word struggling. It's not struggling around 100,000, guys. It's consolidating around 100,000. And so, when we look at that, people freaking out. And then like, oh my God, it's the end of the world. It's the end of times. It's done. And I don't think so. And so we're going to take a look at some charts today specifically toward that. To kind of see where, so you can get an idea of what I'm looking at as far as the markets go, especially with the Mag 7 doing what it's doing. Okay. So, hey, real quick here, while we have a moment, I remember to say this because you guys know I'm terrible at remembering to say this. Do me a favor, hit the like button, leave a comment, share. Do me a favor, share the link, guys. Hit subscribe, follow wherever you're following me out of, simulcasting this across multiple platforms. And just kind of, help me get the word out there because it's tough, I don't engage in a lot of the puff that the big accounts do to get you to, tune in and follow them and all that. I try to keep things rational. I try to, I let the rest of the world blow smoke up your rear end. I don't want to do that. I don't want to be anywhere near your rear end, guys. Okay. And so, unfortunately, that does affect, my ability to be seen. So, if you wouldn't mind, take a moment and do it. It takes like 2 seconds to do it, especially if you enjoy what you get here, right? A lot of free information. And, my goal is always, guys, listen, I don't just do this out of the kindness of my heart. I run a company. What I believe is the most comprehensive and best trading academy out there because we actually focus on teaching you how and why markets move like they do. Instead of just saying, listen, if you do this one trading strategy, you'll forever be rich. We don't want to do that. Everybody sees the world differently. Everybody, not everybody is going to, see the same thing the same way. But if I can teach you how to, understand how and why the market's moving when it does, and what that potentially means, and give you a way of potentially forecasting some price action, that's going to set your, your base for anything. You can go out and learn any other way of trading. And then you can apply this to it and you go, okay, is this working here? Or in this specific style of trading, should I take this particular entry or not? And so there's a lot of help out there. But even if you don't do that, again, my goal is to kind of produce some kind of something that's helpful to you during the stream. So that's been the way it's been. I've been doing this now for what, guys? Almost 7 years. I've been live here. I used to do it twice a day. For those of you that are newer and don't know, I used to actually live stream for 2 hours twice a day, Monday through Friday. And then I got hit by the nasty crackdown on crypto by YouTube. And I got shut off midstream. My channel completely dusted, man. I was out of there. And it took about 4 or 5 months before we finally, actually a viewer, a member of TWC actually came across somebody who worked in a different area of YouTube. And they let them know what was going on. When they went in, they said, oh yeah, there's no reason you should have been, that your channel should have been killed like that. And so they got it back. But by that time I was already streaming over on Twitch. So now that's why I simulcast everywhere. you just can't do it, guys. You're going to get caught, especially if it's crypto, even today, right? So, yeah, it was a crazy, crazy time. Okay. But anyway, so here we are today. And so today now, what do we get with Bitcoin? We've got, the US, we've got Trump talking about wanting to create a Bitcoin strategic reserve. We've got Senator Loomis out there passing, submitting legislation to get voted on to do such a thing, right? We've got Vladimir Putin, who was, made it illegal just a few years ago to transact in digital currencies, now also talking about a strategic reserve, Bitcoin. Japan, just today, we've got his name's Satoshi. He's not the Satoshi, though, I don't believe. But anyway, over there, going to the, within the government, they're saying, hey, why aren't we looking at this as well with everybody else doing it? And so now you got that. And then, of course, in the States here, you got Pennsylvania, Texas just submitted legislation to get voted on potentially. It's still got to get voted on. But, you've got a lot of nation states and even states within the countries, looking to do this thing. And so, this is an interesting time because not only do we have that, but we've been in just about a year with the ETFs, the Bitcoin ETFs, 110 million assets under management with those ETFs, with those Bitcoin ETFs, guys, over 110 million. And so, wildly best launch of ETFs, coming in. Even Ethereum, here's the big thing, guys. Even Ethereum, remember Ethereum was launched back in July, the all of a sudden launch, okay, yeah, you guys can do it. And everybody's like, wait a minute, what? We can do it? And you'll remember for the first few months, it was outflows consistently, right? Well, man, if you haven't been watching the inflows here over the last month or so, you should check it out. They are absolutely crazy, inflowing into the ETFs there for Ethereum. And so you look at all this, and Trump's coming in, and he's got to do the thing, right? He talks a big game, and I'm hopeful that he'll do half or most of what he says, because if he does, what that's going to do, it's going to take a lot of regulation out of the way, which is going to make it easier for companies to build. And when companies can build, when companies can grow, that's good for you and me. That's good for the economy overall. So the idea that, oh my God, it's all got to come crashing down now, I don't believe is the thing. I don't see it yet. And our opinions, here's the thing, guys. Opinions are funny, right? Because I'll be online and people ask me all the time, well, what is your opinion on this? Or what do you think about that? And, most of the time I'll give an opinion, but here's the thing, guys. I don't trade based on my opinion. I trade based on the charts. And if I can help you with anything, besides obviously proper risk management, right, and the importance of it, let it be that. Let it be that you don't want to be so emotionally tied to whatever you think is going to happen that you miss other things that are happening that may be telling you a different story. I guess, again, the best way to say this, Peter Brandt's, saying strong opinions loosely held, right? Which means you got to have an opinion strong enough to take a trade, but loose enough to understand when you're wrong and to get out of that. Does that make sense? So yeah, as we continue to look at this, when we look at that, and I know a lot of y'all are trying to chase these really small, micro caps and everything, and you're hoping to get rich overnight. I can't stop you from doing that, guys. But I'm going to be honest with you. Most people, it doesn't work, right? Most people either get rugged or they get into it and they're doing okay and they get out well before what they expected they would get out at, right? They get out at maybe like a 5x or a 2x, and then it goes up like 100x, right? And they're too scared to get back in. They don't know when to get back in, or maybe they try to get back in and then it pulls back against them and they get out with a small loss and they end up losing what they won. I mean, this is the reality of trading, guys. If there's one thing I could really suggest to you that would help you out as a trader, focus on the large cap names. whether it's stocks, whether it's crypto, whatever it is, focus on the big ones with a lot of liquidity. That's going to be a lot truer telling of what's going on with markets. And it's going to be a lot easier to trade than that other stuff. Now, I know most of y'all are going to go, whatever, man, and you're just going to go do the other stuff anyway. But it wouldn't be good for me to be up here if I wasn't warning you against that. And I would say if you're going to do the micro cap and this low cap stuff, and you're going to hope you're going to get in on Altcoin and hope you get rich, silliness like that, do it with a small portion of your capital account. Focus your if you want to be successful as a trader, here's the key: base hits consistently. Identify the trend, get into the trend, ride the trend for a bit, get out before the trend is done. Especially if you're on the really small cap coins, because there may not be any liquidity for you to get out when you want to get out. And, for a lot of traders, they don't understand. They think, oh, I put my take profit here or my stop loss here. Why did it shoot through it? Well, because there was no liquidity there to fill your order. And you're going to get in line behind everybody else who went in before you. Everybody else who put their orders in before you are going to get them filled first, right? At that area. So, there's a lot of these little nuances in trading that when you first get in as a new trader, you don't really know about until it happens to you, and you have to go through all that frustration and that emotional damage. Yeah, you guys know what I'm talking about, right? See, if I was better at this, I would have had that already figured out that's what I was going to say, and I would have had the meme already set up, and I would have hit the button, and it would have said emotional damage on there, and y'all would have laughed. Ha 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 ha. But I don't. I'm here to give you guys information. I'm not great at a whole lot else, as far as everything else goes, but I am good at trading, and I am really good at markets. And if you've been following for any amount of time, you know this. And so that's the goal. That's what we're doing here, right? Hey, I got a pity laugh out loud from Peter K there. Oh, and JoJo even still laughed. I love it. It's better when I do it, Andrew. I'm going to really butcher your name here, and I do apologize ahead of time. Is that Gertchen? Said we just had the biggest liquidations ever. What are you talking about? For what? For crypto? Well, sure, we're going to have huge. Why wouldn't we have bigger liquidations? Our number is bigger. We're at 100,000. Okay? I mean, when people come at me like that, like, oh, we had the most liquidations ever. Well, the biggest number of liquidations there, price number-wise. Well, yeah, we're at 100,000. We're not at 50,000. We're not at 20,000, folks. Of course, the overall number for the liquidation is going to be bigger. It's not a big deal. Why do y'all focus on that? Because it makes headlines, right? See, this is what I'm talking about at the beginning of the show, right? I don't do a lot of puff like that. Y'all can get that puff everywhere else. You see what I'm saying? And as long as you're continuing to focus on that puff and not really understand what else is going on, you're going to have a hard time. Life becomes more difficult like that. Okay? So, that's what we're here to do, right? We're here to look at these things and do these things. By the way, real quick update. So, man, we're getting a lot of viewership when we go live with our Beards of Bitcoin show on Wednesdays. You're gonna start seeing upgrades in that show. You're gonna see upgrades in this show, and we're gonna continue to upgrade everything we do at the Trading Academy. So, y'all just really hold on to your pants over this next year. It's gonna get really, really great. JB, I am not going to repeat that, but what did JD say? Best community there is, insane value, real OG traders. Chris and Fibber are elite. The customer service is top notch. Yes, this is financial advice. I appreciate that, JD. Again, I can come out here. I can tell you all day long that what we do really works, guys. If you apply it, if you're honest about it and you apply it and you really do the work and the effort and the discipline, the focus, consistency and all that, it does work. And the best part about it is, here's the thing. Everybody goes out there, right? And they're always looking for the next new strategy or for the next new indicator, right? Look at how many indicators are for sale out there. You guys are going nuts buying indicator after indicator after indicator, and they're not helping you. You don't have to do all that. once you learn how and why markets move the way they do, and how to identify it on the chart using free indicators like volume, right? Once you do that in price action, maybe throw some pivots on there, right? All these different ways that I teach you that it can help you get in there. Life becomes so much easier as a trader. You don't have to rely on some indicator that you have to pay every month for, every year for. You can use the free indicators that are available to get in there and really go on it. But if you do use an indicator, right? Because there's some decent indicators out there, but you have to know how to use them. And so if you understand this other thing that I teach, all of a sudden those indicators become infinitely more profitable for you. Because again, you start finding out when they say when they say enter, you look and you see for that confirmation on the way I teach, and you go, okay, yeah, no, this is not the place to enter. Or you go, oh yeah, we should be entering here. And now you can enter with more confidence. And that's the big thing, right? Being a trader, guys, is having confidence. You can't, there's a lot of people out there who do analysis, but they can't trade. They can't get there. And then there's, listen, I don't have anything contrary to a lot of other social media, people out there. I don't have an issue with people who are analysts who don't actually trade. I'm okay with that. Okay. And you should be too, because they don't have to trade it for their analysis to be correct. Right. Some people, they can see the analysis, but they just within themselves, they haven't developed the confidence and the ability to trade effectively, but their analysis is spot on. So, just something to think that don't ever discredit somebody just because maybe they're not trading it, because there are a lot of people, guys, working at big firms like Goldman Sachs and like, all these big firms like that and big banks. And guess what? They don't trade. They're just analysts, or they trade very, very little, right? But their analysis is good, right? Because that's what they do. So yeah. Let me see here. Bitcoin is doing exactly the same as 2017 and 20. Higher low. What would you say? Higher low after higher low, expecting correction from here is not smart. Yeah, I wouldn't say it's doing exactly as it did, but again, there is a certain structure to the market that you are noticing. Yeah. And so, again, this idea that all of a sudden we need to be done right now, I don't believe. I don't think it is. I don't see it in the charts right now. I see quite a bit higher overall. And so we're going to look into those charts here. Let me see here. JB says NVIDIA took the whole market down today. Let me see here. Frank says never let go of your pants. Andrew saying NVIDIA could be in a larger flat correction. Chris, read the beginning of the chat real quick. What's at the beginning of the chat? Are we talking about sats? Discovering Altcoin? I can't even take it. See, this is the thing, guys. I've made good money with crypto, right? But I have so much trouble often taking it seriously because you get nonsense like Altcoin. I mean, I'll go in there. I'll take money from guys all day long on that nonsense. But it's so hard. It's so hard to really take it seriously with stuff like that, right? Anyway, all right, guys. Let's jump into Bitcoin here. Y'all in Altcoin. Jeez, oh whiz. What am I going to do with y'all? Anyway, so we're a correction here, locally on Bitcoin here. But it does appear to me, this does look like it's probably a running flat here. If you look on other charts, this is the Bitcoin USD chart on Coinbase. If you look at the Bitcoin USDT chart, the Bitcoin Tether chart on Binance, this actually dips below the swing low here and prints a spring on this range. But in either case, it's the same structure though. So, I mean, you get a expanded flat on that one, or you get a running flat on this one here. But what's important is what's coming out after, right? And so right now it looks like a 1 and a 2. And it looks like we're getting, we've got a 1, 2, we've got a 3, 4, and we'll get a 5 up here a little bit higher to get us this wave circle 1. So if we look at this 3-wave pullback, I'm going to zoom in a little bit here for you guys. So if we look at this 3-wave pullback, which we've broken out above here, that should say that this corrective move is complete to the downside. And so again, if we then measure it there, that gives us this 104,700 target area for wave 1. Wave 1 of wave 1, 2, 3 off this move, okay? Off this swing low here. Now, I would look for, if this count here is correct, right? We get like a 1, 2, 3, 4, we get this 5 up here. I would expect a pullback down here toward the hourly pivot down here at around 99,100, somewhere right around there. It should be about a 50% pullback, and it should be in 3 waves to give us another, again, a corrective pullback here for wave 2. It looks like it's 99,355 or so. So if we can get rejected around 104,740, I would expect a pullback down here around 99,355, and then things go, right? And where do they go? Where do we go? If we measure this out, wave 3 ends up here at, let's see, I didn't mark it here for some reason. Let's see if we can get a 1 there and a 2 there. Wave 3 is going to be up there around 118 or so. Right, yeah, right up there around them. So probably a little bit lower than that. About 118,000. And that should give us, anyway, that should work if we get our usual wave 4 pullback. Wave 5 of this larger 3 should then be up here around 122,485. Okay? And then we would look to pull back around 110, 111,000 here. And that gives us 5 waves up off this Thursday of last week, this swing low here. It gives us 5 waves up without overextending anywhere. Well, I guess other than wave 3 here, this will overextend because of this interior here. But that'll give us 130,336 target area. Okay? And that's not the end of it. That's just this runoff here. Now, around that time, I would expect most likely a pullback down toward 100,000, and everybody be screaming the tops in and whatnot, and then we'll get another move higher. So that's kind of what I'm looking at right now. Okay. So there's no reason. I don't think there's any reason right now. And by the way, this is not time-based, guys. This is not, I'm not saying, oh, we're going to hit wave 3 up here on December 18th or anything like that. It's just price levels. I don't do time-based stuff because I learned a long time ago I can't do it effectively, consistently. And if it's something that I can't do effectively, consistently as a trader, I won't do it. Okay? But I do pay attention to price levels. And so we're looking up there. Now, what does this mean? This means we're looking probably, upwards 170, 180,000 minimally. All right. So again, we can just take it as we go right here, working our way up. And there's just little reason to be, really worried about it, right? If we jump out here to the daily, look at this daily out here. See if we can show this here. There we go. So we have this higher lows here, lower lows here. That's, hidden bullish divergence. That means continuation of the bullish trend. So we should expect it to break out higher here. You can see that stochastic RSI is just now getting to neutral. We're not even bullish on that yet. RSI is curled up here, threatening to cross bullishly above the SMA and then targeting, overbought here, which again, overbought doesn't mean, oh my God, I need to sell right away. Overbought just on an oscillator just tells you that the market is extremely bullish. And you can sit up there and overbought for a while you continue to make huge moves up. Look at all this move up here from, 40,000 to 70,000 while we basically stayed overbought. So don't think that just because you'd overbought, you have to sell immediately or short, or just because you'd oversold, you have to buy immediately or long. They're just telling you, listen, the market is extremely bullish or extremely bearish at that point. And then you just pay attention. Okay? Let's see here. So, again, this is what we're doing. And as you can see here, I mean, when we zoom out, we take everything off. You should see that what you have basically is this kind of resistance right here. And you've got these higher lows up into this, other than this one slight deviation out here, right? But you've got higher lows pushing up into this resistance area right here. And, most often it's going to kind of take you on a move out. You can also see that you've got good volume here on the pullback. Look at this daily volume. We've got more volume here last, Tuesday than we did on Monday. Look at how small that candle body is compared to this one. So more effort, significantly less result than the day before. And what happens? Boom, next day goes right back up, and you have just a tad bit more volume there as well, right? And we kind of hit up here, and we're kind of pull back a little bit on some volume, but here we go again, trying to continue the push up higher. Okay. Let me see here. How do I feel about potentially going to 85, 80,000? I don't think we do right now. It's a possibility, but I don't think we do. I think at least right now we get some further upside. Let me see here. There we go. Even if we just took, let's say, the overall height of, again, we're looking at this correction here, this overall height of this correction. You're still looking, based on the height of that, a pattern target of around 112, 113, about 113,000. So it's hard to be like, okay, well, here comes 80,000 right now, right? It's really hard to be that way. So yeah, until we're getting something significant. For me, instead of rallying up here, we'd have to break down below this wave 2 here, this 94,220 and 80 cents on this chart. We'd have to break down below that for me to even start thinking, okay, we head down. But here's my thing. If we were to break down, my initial target, if we were to break down below this range here, is going to be that daily pivot at around 87,695. That kind of 87. We could wick down maybe to 86, 85. But on the daily, I would expect the body to hold support around that daily pivot. We're only 13 days into the month, so that daily pivot remains strong. Now, if we were to break down impulsively below that daily pivot and close below it on the daily, that opens up the possible run down to the S1 pivot here at about 75.5. But again, where we're at right now, that's not even something I'm thinking about. We would have to break down below that wave 2 before I'd even start considering maybe we might get the daily pivot, and really don't think we'd hit the S1 right now. Does that make sense? So yeah, so I believe we continue higher, right? Apparently we have people coming in that just want to troll because they don't read, or all they do is they read, they don't pay attention, right? So because of my show title today, oh man, this guy, man, you guys can see him talking in there, right? He thinks I think we're going to have a correction because I said, is it time for a correction? It was a question I posed. I wasn't saying that was what it is. And I've spent the last 30 minutes saying, I don't believe we're going to have a big correction right now. We're going to go up much higher first. Guys, you got to pay attention. You're not going to get very far in this world not paying attention. If we did go that low, would it still be bullish? Yeah. We would have to really kind of continue beyond that to really say that top is in. And if we did get that kind of pullback, to 80,000 or something like that, or 85,000, something like that, or hell, even the S1 pivot down here at 75,000, that would just be like really, I would have to say it would be much, much more bullish than even what we're seeing right now, because it's a larger correction. And larger corrections lead to larger rallies, right? If you get a larger correction, you should expect to get a larger rally. Now, obviously, if it's a top, it's not really a correction in that sense right there, at least for that cycle, right? But Again, there's nothing going on in the charts right now that suggests that the cycle is done and over with. Okay. But here's the crazy thing. Somebody was talking about, the fact that the actual dollar figure in liquidations was so large, right? And so here's the crazy thing. You're talking about that, right? But here's the thing. When we were at 20,000, we'd have like, a couple of $1,000 correction basically, right? Because at 20,000, 10% was a $2,000 correction. At 100,000, 10% is $10,000, 5 times larger. But people go, oh my God, here's the problem with a lot of retail traders is we're talking big numbers here. And most retail traders aren't used to dealing with $100,000. So the way that we view money is tied into the way in which we spend money. Okay. So if you are at a lower economic level, right? You're making 50,000 a year, or heaven forbid, you're making 20,000 a year or something like that, right? It's going to be a lot harder for you to emotionally understand $100,000 because your day-to-day life is all about that much lower number, and 100,000 seems so huge to you, right? So when you get a correction, a 10% correction from 100,000 to 90,000, and you go, holy crap, that's $10,000, or you're focused on the $90,000 number. Well, I mean, that's emotionally what's going to happen because that's what compared to what you're used to dealing with on a daily basis, that's what it is. And so I bring this up because this is why a lot of retail traders, if they're doing well and they start getting beyond where they're comfortable with the numbers, they'll start doing poorly. And you hear about it all the time. People that were, you'll hear somebody say, oh, well, I was a cook at a fast food restaurant making, $12 an hour. And I put in $100 and I ran it up to 100,000 and then I lost it all. Well, yeah, you lost it all because you weren't emotionally prepared, psychologically prepared for those bigger numbers. And so as you got bigger like that, and your position sizing got bigger and your account got larger, you became more fearful. And fear stops you from doing the things you need to do correctly as a trader. It makes you stop utilizing your system the way that you do it, what got you there. But you're going to see this all the time with traders, with retail traders who aren't used to dealing with bigger numbers. It is something you absolutely have to work with, right? As a trader, you can't just assume that, oh my God, I'm going to get into trading, I'm going to do great, and I'm going to be just fine. Because the higher that number goes and the more you make and the larger your capital account gets, which means the larger position sizing is going to start getting, right? So you can trade accordingly. The more your emotions are going to come in and play. And you're going to lose a lot of it. It's really bad. So, again, if there's another thing I can help you with here, let it be that reality. Understand that that's the reality that you're going to face if you're not used to dealing with, 6 figures or 7 figures as price continues to go higher. You're always going to be focused on, people today go, oh, I'm not going to put money into Bitcoin because we're not going to get 10x anymore, or 50x or whatever. Well, okay, yeah, probably not in a cycle anyway, right? But you're missing the other important side of Bitcoin, which is protection of your wealth, right? You're protecting yourself against that monetary inflation, against rising prices. And I would argue that's probably more important than getting 100x or 10x even on Bitcoin in a cycle. So, again, it's all in how do you approach the markets? What are you looking for? Right? Dude, man, you got to stop with all the caps. It's, even my dad knows better, and he's 70 somewhat years old. He accidentally posted something on social media a couple of weeks ago in all caps, and he was like, "Ah, shit." He didn't mean to do that in all caps. But man, oh man, I don't know. I guess, I don't know. People looking for attention, I guess. Yeesh. Cringe. Anyway. But listen, guys, we're here to learn, right? That's what we're doing. So anyway, yeah, again, looking for it to head up further here. Now, if we jump on over here, the other side of this is big tech, right? Man, look at the Qs, guys. Look at the Qs. Okay. Again, this consistent, ever since we broke out from this November 22nd of 2021's all-time high here, right? Once we got the real breakout there, retest, right? We broke out, and then we had this one right here. We broke out, retested. We dipped below, came up, retested. I mean, it's really overall, we just had the 1 week down. It gapped down and then right back up. Finished the week right back up there, right? Again, here we go again. Putting another high here. We've got this great channel that we've been following in since down here around October of 22. Absolutely great channel. So here's the thing. Minimally, I would generally look at the height of this pullback here and say, okay, we've got at least a 547 target from down here. So that's why that's been up there. And we're just about to hit it. Most recently, we had this pullback here, which then gives us a pattern target of 560 on there. But I believe we'll continue up higher through that. Again, we're about to break through the channel EQ here. So we should look for a rise up toward the channel resistance. That gives us 600 at least on there. And I think we continue up, we do continue up here. There's no, yes, we're getting to that happy point in the markets, right? Everybody says, oh, I can't wait for the bull market. And what they mean is they can't wait for the point where price kind of moves exponentially. But then it gets there and people are like, oh God, it's the end. It's the top, right? And so you get in, they go, oh my God, it's the top. And it's not. And they go, oh my God, it's the top. And it's not. And they go, oh my God, it's the top. And it's not. And they go, oh my God, it's the top, right? You guys see this. It's not just on the keys. It's on everything, right? At Bitcoin, how many people have you seen? Oh my God, how many people do you know were saying this was the cycle top here? And the longer this went sideways, the more they said this was the cycle top. And the thing was, I spent 8 months here explaining why this was not the cycle top, why this was just going to be a correction, a reaccumulation phase before rallying higher. Spent 8 months talking about it in terms of Wyckoff, in terms of Elliott wave, in terms of price action and volume analysis, in terms of pivots, in terms of previous cycles. I even went there. Didn't have to go there, but I did. But if you guys remember back not too long ago, during the 8 months here, people just constantly, your feed was very bearish. It's the top of the cycle. It's the end. It's done. It was nowhere near done. We bopped down to 49,000 here, and we've rallied up to 104,000. That's more than 100% rally there. In how long a time? 122 days. That's it. That's it. It's like 4 months, guys. It's crazy, right? You have to be careful online. Most of the people that you're going to find online are emotionally driven. And this is even a lot of your professionals. There are a lot of your professionals out there that are thinking, oh my God, emotionally, they think, oh God, how is this going to continue going, right? They talk about the curve inverting, right? The yield curve inverting and uninverting. It's done that how many times over the last 4 months? It just did it again. And a poster coming out, oh, here's the one that matters. It's going to happen now. They talked about, everything. And I've talked about all these things as they've happened, right? They've talked about unemployment. When it went from, 3.9 to 4.2% or whatever, and triggered the SOM rule. And I came in immediately and I said, yeah, it did, but things are materially different since COVID as far as the unemployment market goes. And the SOM rule was based on the way things were prior to that. And then what happened? Was it 4 or 5 days later? SOM herself came out and said the exact same thing I said. But you can't tell people when they're emotionally driven, something different. They've got to, let go themselves. The problem is you become too emotionally held onto your position, and then you can't let go. And so you'll come up here and go, from down here, you go, oh, this is the top. We're going to go back down below 16,000. Oh, there's the top. Now we're going to go back down below. We're going to come up here. We're going to get rejected. And we're going to drop back down. Up here, oh, there's the top. We're going to go down. Oh, there's the top. This is the same. You see the same people that have been saying this the entire way. You got to be careful with that, guys. Okay. Let me see here. Does anyone know the scheduling for the TWC Academy live streams? After the new year, I'm going to have more time to dedicate. Oh, man, we'd love to have you in there. Yeah. Let me see here. Peter's got it on there. Yeah, group coaching. Yeah, we do Mondays is Wyckoff at 3 p.m. Central, 4 p.m. Eastern. Wednesdays is price action, and we do at 4 p.m. Central, 5 p.m. Eastern. And then Thursdays is Elliott Wave, and we go back to 3 p.m. Central, 4 p.m. Eastern. But here's the great thing. I record all the live streams, and you've got access to all of you. You have the access to over 500 hours of sessions that we've done over the last, I think we started doing those things consistently about 3 years ago. And so you have access to all those and, search functions, search through it and everything. So, if you want to watch, if you do watch it live, you want to watch it again, you can. If you can't make it live, because we've got people from all over the world and many can't make it live, so they watch the recording and then they just drop their questions underneath the recording, and we help them, with whatever questions they have as well. So yeah, we try to make it as easy as possible for you to get the education, whether whether you're available at the time it is or not, in there. So yeah. So yeah. So that's what we kind of do. And of course, since we did this, remember that we used to do, it was $39.97 for the year, just for the group coaching. And we finally were able to get it to the point where we could try this out, what we're doing now, which is this all access pass for $97 a month. And you get all that we were charging $4,000 a year. Plus you get Fibbo's threshold theory. You get to learn his proprietary trading system. And plus you get access to the TWC Traders Club, where you have my trades, Fibbo's trades. Andrew, you see him here in the comments, his trades. Andrew and Vince are our head traders over there at TWC. You'll get their trades and all our market analysis throughout the day as well. And so, we do stocks and we do crypto, and we do some futures as well on that. So, a lot of stuff in there. By the way, if you do join, listen, I'm about to... I taught something in a price action 2 Wednesdays ago in our price action session. If you're in and you haven't watched it yet, get over and watch it. If you're thinking about joining, get in and join, because I'm going to take that off and I'm going to sell it separately. It's a very simple system that's very profitable, but it makes it so easy that even if you've never traded in your life or never traded successfully in your life, you can follow this. I'm telling you, it's so simple, guys, a simple system. And you're going to be a lot better off. And so it allows you to make money on your own while you're learning everything else we teach, which is how and why markets move like they do, stuff like that. It was an absolutely crazy session. And, again, it's something that I will be taking down and repackaging it on its own. But if you're in there now, or if you're thinking about getting in there, jump in there, do it, because it'll be more than $97 when I release it on its own. But right now, again, you get that access to it. And this is kind of the things I do, right? So I always try and treat our students and our subscribers really, the best possible. And so they usually get the opportunities first. They usually get, they get to cling on to old pricing when we change pricing and we raise pricing and stuff like that. And so, again, just that way of saying, hey, listen, you're here supporting us. We're going to be there to support you as well. Let me see here. The offer you get is amazing trade. So there we go. See, Peter letting you guys know. But anyway, so yeah, so we've got that. So there we go. So anyway, jumping back over to the Qs again, no reason to think that we're not going to continue up higher here. Things still continue to look good. We're still within this channel. You could even draw, here's what's interesting. You can even draw this channel, say right off this low here and take this high. and you have that one weekly drop and move back up, and then it continues to hold the support here, and we're heading up toward, toward the EQ of that range there. So, if you prefer to do it that way, you can. I don't draw like that though. I go from the supports to the resistances, and as you can see, we're kind of hovering along this EQ here, looking to try and break out right now, up through there. Jump into the monthly. Monthly continues to look really good. We got some nice movement up through this year's pivots. Here, never even came back and tested the pivot itself. So I'm really interested in seeing where the pivots redraw on the 1st of January. And I'll be looking back in here, and that'll tell us a lot more about potential, topping out points and whatnot with the Qs here. But big tech still looks good. Now, what did I say earlier? I said 6 of the 7, I think I told you guys, right? 6 of the 7 Mag 7 stocks all broke out to new all-time highs this week. All right. Apple. So Apple had this great accumulation range over here from July of 23. And then we finally broke out, jump across the creek here in June of 24. So a year later, we got a show of strength, a back up the edge of the creek, more reaccumulation here before we broke out higher. Now, here's the thing. If I'm looking at this, guess what, folks? And again, we got that on the daily here. You see we made the new all-time high here on Wednesday, right? But I'm going to look at this. Let me see here. This looks like a running flat. So if I'm looking at this, I think it looks like a running flat here. So I would list this, if this thing is going to continue to be bullish, I would look at it something like this. This gives us a 310 target on 5 waves up from here. The idea being this is 3 down for A, 3 up for B, 1, 2, 3, 4, 5 down here for C. And B broke out above where wave A started. C closed below where wave A ends. So it gives us a running flat here and moving up. Now, it's probably get a pullback here, but I don't, for any reason, believe that that's at the top at all. Again, we zoom out here to the monthly. Things still look good and strong here. Coming out through there, just hitting that R2 pivot right now on that. But yeah, I like Apple overall. I'd be interested in buying on a pullback. So looking for a pullback here. What kind of pullback could we look for? Well, let's see here. Yeah, so if this is going to complete one wave up and pull back, my initial target would be that 234 area. So if we can get some confirmation on this breakdown, I would really look for a breakdown below this swing low here at 241.75. If we can drop down through that, I'd be looking down here toward 234 and a half is my initial target. And, so that then just gets you here on this move out here. It just gets you the pullback to the retest, right? The retest of the resistance as support in here. So a little bit easier sometimes to see on the bigger time frames, but that's what we'd be looking there. We're looking at NVIDIA. NVIDIA just doing some sideways here around the previous all-time high, right? So it made a new all-time high back here on November 21st. And we're pulling back here. If we continue to break down below the swing low, my first target is that daily S1 pivot there right around 129. And I will be watching for a rally off that. If we drop to that point and get a rally up off that, a breakout above this swing high here at 146.54 is going to indicate that we're heading up higher now. So that's what I would be looking for on that. If we continue to break down through that S1 pivot, though, good target. See this right here. This support resistance level right here, right at this kind of low volume node area. around 117 or so. That would be the next place I'd be looking if we were to do that. Look at that weekly reset, though. Weekly is already dropping below. The stochastic RSI is already dropping below mid-range there. So that could, I mean, God, if we got that big enough pullback like that, that would really be setting up a large move higher. But right now, based on the height of this pullback here, right, gives us a pattern target up here around 183, 185. So I think we should at least kind of get toward that area. Goog, Alphabet. Well, this is Google, G-O-O-G-L here. Again, new all-time high on Wednesday here. Boom, shot up. So I had this nice breakout of this descending wedge. Adam, not Adam. Andrew, are you paying attention? We got this move up here. And so great move up, breakout up here. There is a gap down here that could get kind of interesting. But for right now, again, based on the height of this pullback overall, we'd be looking up here at least around 226 or so pattern target. Okay. Meta. This is the weekly. Let me jump into the daily here. Again, Wednesday, new all-time high. Remember, I told you we're getting new all-time highs, 6 of the 7. NVIDIA was the only one that didn't. Okay. New all-time up there. Now, obviously, we're trying to pull back a bit. That's fine. Let me zoom back out here to the weekly. Based on the height of this pullback here, our next pattern target is where we hit right here at 639.73. So that worked out really well. God, it's almost exactly where we hit. Getting pretty close, a few dollars off. But yeah, really good there. You can see here on the weekly that we're just kind of getting going. We're just bullish and neutral here. So again, not really all that concerned. We might get a bit of a pullback, but overall, things should continue to be really good for that. I want to see where this closes at. We've got this nice fair value gap printing right here. A nice large one on the weekly. It's in the daily. It didn't stay on there. And so if we jump into the daily, yeah, see that daily. We do have a fair value gap right here and another one a little bit lower there toward the bottom end of that. So I wouldn't be surprised to see it getting down here around 591, 580 to 590 kind of area here on a pullback. But to me, again, I believe it'd just be a pullback and then we take off higher here. Amazon. Whoops, hit the 3-day there. Amazon, another one. Look at that. Made a new all-time high. What is that? On Wednesday? Again, on Wednesday. Nice big move up through here. We should get a bit of a pullback. But overall, we should continue higher. Once again, if we're looking just based on this local pullback here, it gives us a pattern target of 239. But more importantly, we have this much bigger pullback right here, which gives us a pattern target up there around 315. And then we've got Microsoft here. And so Microsoft, well, okay, so Microsoft had a new all-time high back over in this summer when they had it. They didn't get that yet here. But nonetheless, based on the height of this pullback here, get a pattern target. You can see that it hit our initial target up there, 464 area. But we got a pattern target up there at about 526, 527. And locally here, looks like we've got maybe a leading diagonal going here. So we can get like a 1 and a 2. And that'll probably take us beyond that pattern target. we looked at something like this, oh yeah, that'll take us up there closer to 600, 526. So Microsoft's still looking good there. And of course, Tesla, we all know Tesla, right? Tesla making another new all-time high here. It did so on Wednesday, and it's continued to push up here. As we look here, continue to push up higher. And that's just a beautiful new all-time high there above that November of 21 high there. And once again, if we're looking at the height of that pullback for a target, just a pattern target, you'd be looking closer to $1,000, $995 up there. Based on a potential count in here, we might get closer to $1,212 on there, or even a bit higher than that. We'll see how it continues to play out here. But locally, all these more likely not to pull back sooner rather than later. But on that pullback, I would be looking for a reason to go long after we get that pullback complete. Again, nothing in here screaming, oh my God, it's the end of the world. Big tech's done. Everything's going to drop lower. So, do with this information what you may. Okay. We've got MicroStrategy. Potentially, I saw a post earlier today that said somebody had insider, reporter from Block, I guess it was, said insider told him that there was going to be an announcement at 8 p.m. Eastern tonight that MicroStrategy is going to be included in the NASDAQ 100. And then, of course, we're looking at Coinbase likely being included in the S&P 500 at some point here coming up in this next year. Why is these things important? Because they both hold Bitcoin. And that means if people are buying the NASDAQ 100, guess what? Now they have, if Microsoft is in there, they've got, MicroStrategy's in there, they have exposure to Bitcoin, whether they know it, like it or not. They got it, right? If you're buying the S&P index and you got Coinbase or somebody else in there that's holding Bitcoin, on their books, guess what? You've got exposure to Bitcoin now. And this is a big thing. This is a big thing when we look at, continued growth of Bitcoin out there in the world. Okay. It's crazy, guys. It's crazy. Now, I'm not going to tell you that we're just going to go up forever and this is going to be fine and dandy. But for right now, I think we're still good to go over the next year and potentially the next couple of years. Especially with Bitcoin over the next couple of years, because of the amount of adoption it's had this year and what we're looking at next year. So anybody that's looking at the Bitcoin ETFs, anybody that's anybody, right, that follows these things and does these things professionally, they're expecting the Bitcoin ETFs to rake in even more money next year than they did this year, which makes sense, right? This is only beginning. You see everybody else is in there. You got to get in. You guys, a lot of times you guys don't understand that when it's not just retail that follows, right? It's not just retail that herds. It's big money managers. It's big companies, right? They'll tend to follow each other, to their success or their detriment. They'll continue to follow each other. And so, it becomes a big thing. You'll see people, and what you're seeing a lot with Bitcoin right now is people that were deriding it a few years back are now like, oh, well, hey, listen, we should really be doing this, right? I mean, look who's been doing it over the last year or two. Fink was detracting of it back a few, 2018 or so. Goldman Sachs is like, okay, well, hey, we're interested now. And you're kind of seeing this across everything. So I just, guys, I'm not going to give you financial advice. I'm going to tell you what to do. But at the end of the day, I mean, I look at this and I don't know if, when I'm looking as a professional who invests in trades, right, for 30 years now, when I look at Bitcoin in 2017, it made no sense not to have some kind of exposure to it. At the time, I was telling people this is like a once in a generation, once in a century type thing that you're going to get access to. You know, I never thought I'd get access. You know, I never thought I'd see something like this in my lifetime, right? And there we are. And if you haven't yet, and now here you are, 2024, end of 2024, and everything that's happened, especially in this last year, and you're still don't have some sort of exposure to it. I know Fink just came out and said, hey, listen, BlackRock just came out and said, hey, listen, you should probably have a 2% allocation to it. Now, obviously, I believe you should have more, but you know, for people that are trying to get off zero, that are trying to just get up into it, I mean, I think that's a great place to start. And 2%, here's the thing about 2%. A 2% exposure in Bitcoin is not going to kill you if it ends up not working out. You know, if you're worried that that's what it is and it's not going to work out 10 years, 20 years from now or whatever, well, guess what? 30 years, 50 years, whatever. 2% is nothing. Okay? But if it does blow up, if it does continue to do the thing that it's done, and it continues to move as we expect, that 2% is actually going to be quite significant, both in your portfolio and protecting your wealth, even just 2%. But hopefully, we'll kind of jump in a little bit more than that, right? So yeah, it's again, it's people are not going to, they're still not going to do it. They're still not going to do it. And maybe you're listening in and you're one of those people that maybe won't do it. And that's okay. Just understand that, the decision you're making as a trader, as an investor myself, it's always about risk management. It's always about risk management. And there's a risk that I miss out on the significant appreciation of Bitcoin and the protection against, inflation. And that's what I've used for the reason why I've gotten into it since 2017. But a lot of people, they look at risk as, well, what if it doesn't work out and I lose? Instead of, well, what if it does work out and these things happen and I don't get into it? Where's your risk on that, right? Risk adjusted, Bitcoin is better today than it was in 2017, much better than it was in 2013 or 2011. It's less risky to get into it right now at around 100,000 than it was to get into it at $1,000 or $500. It's much more risky to get into it back then. Right? Let me see here. All right. So anyway, so we've got that. Somebody's asking about AVAX here. AVAX. Let me see here. Do we got that on Coinbase? I can just pull it up here maybe. We do have it here. What do we got? It's a pretty little run there, right? Let me see here. So right now, if I look at this, I go 1, 2, 3, 4, 5. So it gives us a 1, ABC down, ABC up, 1, 2, 3, 4, 5, expanded flat correction. So again, for me, it's the weekly here, 1, 2, 3, 4, 5. Go ahead and make this a little bigger here. Let's do it like that. Just then a 1 and a 2 here. So there's our expanded flat correction. Labeled out in there. That pullback was how far? That was almost the 61.8 exactly. So, again, if I look here, I go, well, hell, we got a 1 and a 2. Wave 3's in progress. Minimum expected target at 292. That gives us a minimum expected wave 5 target at 567. So potentially a 10x from where we're sitting right now. That's not too bad. Right? Let me see here. Oops, let's get to the daily. Yeah, that daily is just getting started here. So if I'm coming off the low here, this is 3 waves down. We broke out above it. This correction should be good. Unless we're doing maybe like a triangle, we go ABC, 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 ABC. We could be doing that, but right now this looks more like 1, 2, 3, 4. We'll get a 5 on the breakout here. But pattern target based on the height here, get you up there around $68. If we can, again, look at this as a 1, 2, 1, 2, 3, 4 here. We would look for an initial pullback toward the 38.2 retracement right around $49.50. If it continues through that, the secondary target is always the 50% at 47.82. And then we'd look for the rally up. So based on that, pattern targets, let me see here. We get down to 38.2. Give us a pattern target up here at around 59.36. If instead we get down to the 50, give us a slightly higher pattern target there at about $60.50, somewhere like right around there. And that would just be, 5 waves up coming off that swing low there. But overall, much higher targets with that. Okay? Any validity, possibility to the FUD that there is active initiative to keep Bitcoin below 100K? Altcoin Daily did a video on it recently. Yeah, that's how I feel, honestly. Everybody's going to talk about manipulation and this and that, and yada, yada, yada. But here's the thing. If you learn how and why markets move the way they do, which you're learning because you're in there with us now, and you learn, that markets have a certain form to their movement, that they don't move move erratically, but they don't move just willy-nilly, right? There's a structure to their movement. And so when you do that, you go, okay, well, you know what? Who cares if it is or it isn't? At the end of the day, we, based on structure, we know where price is likely going. And that's the best thing about the way that I teach over there. And even Fibbo's system, the way that he teaches it, because it takes out all the other noise like that, right? Because if you sit here and you're like, oh my God, you hear that, you're going to freak out and go, oh my God, well, somebody's holding it down and blah, 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 rather than going, well, what does the chart structurally say? What is that volume and price action saying, right? And once you learn that and you start becoming comfortable with it, you start trusting in it. Does that mean you're always going to read it right 100%? No, of course not. Don't believe anybody that tells you they do. It's nonsense. It's nonsense, guys. But you don't have to. That's the thing. See, we come in often thinking as traders that we have to be perfect. And you got to get rid of that attitude as quick as possible. I'm a perfectionist. I grew up with a dad who was in the Navy. He was a high-ranking NCO. So he was very strict, right? And I had to do perfect with everything I was doing. So coming into trading, that was one of my biggest difficulties I had, because I had to let that go, because trading is not about perfection. It's about consistency. Consistently locking in profits. And if you think about it, that's 100% opposite, 180 degrees different from what you think, right? When we first come into trading, we think it's about perfection. We got to buy at the absolute lowest price and sell at the absolute highest price. We have to know what the market's doing all the time. Absolutely have to know, all these things, right? And all that is completely wrong. And you're losing money because you think that that's what it is, and you're focusing on that and trying to do all that, which is impossible. That's why I sit here and I preach proper risk management all the time. You absolutely have to have proper risk management. Because what happens if you don't? Well, it takes you being wrong one time to wipe you out. But with proper risk management, you can be wrong quite consistently and still make money. Because it takes time to get good at trading, guys. You're not going to learn it overnight and become like this great trader overnight. You're just not. Everybody thinks they're special. Nobody's special. We all come into this game the same way, thinking the same thing. But that's good, because that means, hey, listen, you can forgive yourself now for all the mistakes you've made in the past, and you can start focusing on the right things that you have to do, the things that are going to help make you successful, versus those things you've been doing that are making you not successful, but you thought you needed. Does that make sense? But this is why I don't ever worry about that. I'll talk about things like, oh, nation states, get in there, Bitcoin or whatever. But at the end of the day, that doesn't affect what I'm looking at on the charts. You know, I mean, it may give a little support to what I think is going to happen anyway, but my trades are never based on this over here. Absolutely never. My trades are 100% always based on the chart. Never based on what it is. And because guess what? If it was, listen, guys, Bitcoin, if my charts, if my trading was based on what other people were saying, I would have sold out of everything here, thinking that was the top. I wouldn't have said buy down here. Everybody was saying it had to go lower. So I'd be looking lower, right? Right here, when we broke out of this range, I remember this one quite vividly. We had this range here. And I said we were likely to break out and reaccumulate on the rise versus retest here. And even here, people were talking about it had to get rejected here and come down lower. Again, if I listen to other people and I listen to all these fundamental reasons why they believe that, I would have been selling here. Instead of saying, no, it's going to break out. And when it breaks out, it's not even going to come back and retest. Because some of the people said, oh, it'll break out, it'll retest. No. It did exactly what I talked about it doing here. And I said that a lot of times on, whatever that show I used to be on quite a bit in the mornings on Twitter Spaces, Town Hall. Said a lot in there. But, you know, so nothing when I trade, the way in which I trade, it never has anything to, I don't care what the news is, what somebody's saying. Right? I'll tell you if the news is likely true or not, based on what the chart says. That's what we look at. And, you know, as I've proven, you know, for years now, been doing this publicly for what, almost 7.5 years now. You know, I've been quite correct. I've been wrong at times. I have been wrong at times, and you will be too. That's okay. Proper risk management saves you from it being something, you know, something terrible. But we can't always read the charts exactly correct. You know, we still have to deal with emotions and things, right? And sometimes there's a couple of different possible ways that price may move, and you've got to pick one. But that's why the proper risk management is so important. Fiboswani says, fundamental analysis does not take into consideration momentum and trend. Psychology, baby. Exactly. Now, again, remember, I've been doing this for next year will be 31 years. Fibo's been doing it for over 20 years as well. You know, in Fibo's day job, he happens to be head trader for a company. So, I mean, you know, between the both of us, we've got over 50 years of experience, and we're both telling you the same. We approach the charts a little differently in our analysis, but we both come from the very same base area, which is it's all about human psychology. It's all about social mood. And obviously, you know, the way we look at it tends to work pretty damn great, because here we are still doing it decades later. Fiboswani thinks we're good looking. What do you guys think? Let me see here. Let me kind of catch up with you guys here. Let's see here. So yeah, so when it comes to that, you know, with this idea that it's being suppressed, I mean, what do you think you can really suppress it? No, I don't believe for the most part it's really all that available to be suppressed. But even if it is, it doesn't matter. It doesn't matter. If you learn to read the charts, you can figure out what's going on. And the best thing about that is, you learn, okay, well, if I'm wrong, what's maybe right? And the best part about this, listen, guys, when you're trading, fear is your biggest problem. Okay? Psychological studies have shown that people get more pain from losing money than joy and happiness that they get from making money. So you have your two largest psychological emotions, right? Your two largest emotions, fear and greed, at play all the time in the markets. Fear is always the bigger of the two. But the good thing about fear, about understanding fear, is that fear comes from the unknown, right? Fear comes from the unknown in the markets, right? We FOMO, fear of missing out, right? We're like, oh my God, but what if it goes up without me? Fear of missing out, right? Oh my God, FUD, right? All this bad information. What if they're right? All this bad information, blah, 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 right? So when we're looking at this, you say, okay, well, if it's fear that determines, how we're going to do, then how do we remove that fear? Well, we learn, right? We learn how and why markets move the way they do. We learn about human psychology and trader psychology and market psychology, because those are ultimately the drivers of it, right? And you go, oh, but so much of the trading is done by algos these days. Well, yeah, but those algos have to be coded. And those algos are coded with what we understand about human emotion and human psychology and trader psychology and market psychology. They don't just say, oh, it's going to be this level because of this. No, they know that psychologically, if A, then B, usually. Right? So that's why I take the approach I do at the Trading Academy. Because my goal is to hopefully help you become much better traders than I've ever been, and to do it in a lot less time. It took me a long time to get my crap together and figure out, man, I really got to be serious about this. I said, listen, guys, and you may be doing this yourself, okay? Before I go here, I just want to say this. We tend to lie to ourselves a lot, not just in trading, but in life. We tend to, especially when it comes to effort. We say, oh, I'm giving it a lot of effort. I'm really working hard at it. But the reality is we usually aren't, right? We usually aren't. Because you can go there and you go, okay, well, if I'm really, really doing that, what kind of level are we talking about? Are we talking about like think of your greatest sports star, right? Or your greatest musician, whatever you enjoy. Do I put in as many hours practicing and learning how to do it as they do? You could say, oh my God, well, God, here's the way to think about it, guys. These professional athletes, they get coaches. Football, baseball, basketball, golf, they have coaches, right? Yeah, golf, yeah, but the other ones, right? They're team sports, they got coaches. And then they go and they use their own money to go get other coaches, to get other psychological experts to help them continue to be the best they can be, to be successful at what they're doing. So when you say, oh, I'm really doing it, I'm really putting in an effort, I'm really working hard, are you really? Or are you lying to yourself? Because I'm going to suggest, for the same way I had to admit to myself, not really. We're not really trying that hard. But once you do, especially, it comes to trading here, it really opens up your world. You start learning and things start making sense because you're not fighting anymore. You're actually actively trying to comprehend it. There's a big difference. You'll notice the difference when you do it. So, again, I would say whether it's trading or anything else in life that you say that you want to do or that you say you're really, working at, really focus on what I just said there and ask yourself those questions. Are you seriously doing it, or are you just kind of saying that you are? because we all like to say we are. Very few of us actually do the thing the way it needs to be done. Does that make sense? So yeah, again, yeah, I see some of you guys over here agreeing. Skiing Rooster, Brian Mocha, what's up, man? Did I go over MSTR at all? No, I didn't go over MSTR today. We're just about, I'm out here. You know what? Let me throw on MSTR here, and then that'll be the last chart. Let's see here. What we got going on? So much of what you guys need to learn about trading is up here. It's not in the strategies and the indicators and whatnot. It's in understanding yourself and your emotions and your psychology and how that applies not just to you, but to everybody else in the market. That'll give you a much greater return than trying to learn a new strategy. Most of you are going to have issues with focus, discipline, consistency, and effort. Those 4 things. They're required for trading. They're required for any skill that you're going to learn or anything you want to get better at. And so, as I always tell you guys, I'm not here to blow smoke up your rear end. I'm not here to tell you the things that you want to hear to make you feel good. I assume if you're here, you're serious about learning markets and you're serious about learning trading and investing. And so that means I have to tell you the things that you need to hear. But I promise you, pretty much 100% of these things I tell you are the same things I had to go through myself. And had I not gone through them, I would not be where I am today. Absolutely would not be as successful as I've been able to be. So here we go. Yeah. So again, I've got this as a 3 and a 4 here. So what I'm looking for is a breakout above 453 based on the height of this pattern here. That gives us a pattern target at 724. Okay. It's possible with this continued consolidation here, this could be a triangle. This could be an A, B, C, maybe D and then E, or maybe D and then E. But if we're breaking out above this one here, that'll tell us, that we're, this one at 444.94, this last swing high, that, it's probably not a triangle and we're headed up, or it just completed here and we're headed up. But yeah, based on the height of this here, I've got a 724 target. You can see we're just hovering. See, often when we hover around a pivot like this, usually it's a triangle. It's just consolidation around it. And that's what it looks like here. Potentially as well. You see the daily. Just kind of, it's still on the bearish side of neutral for stochastic RSI. RSI is on the bullish side of neutral, curled up, threatening to break out bullishly here. So yeah, I still like MicroStrategy for later, for longer. Render took off like a rocket. I actually talked about Render last night in our market wrap for part of the trading club there. Yeah. I wish I could get to all these guys, but it is 12:30 here. I've got to get going. I've been doing this an hour and a half. But I really hope, guys, if anything else, more than the charts that I talk about and stuff like that, if you're coming in here, I hope that you're really paying attention to the other stuff I talk about. When I talk about psychology and emotion and discipline and effort and focus and consistency and risk management. Those are the things that will determine if you're successful. Because here's the thing. If you don't have that emotional stuff figured out, you can have the greatest strategy and you won't follow along in it. It'll say buy here and you won't buy. It'll say sell here, you won't sell. It'll say stop loss here. You might put it there, but then as price gets near it, you'll move it. And that's what's going to make you lose. It's not that the strategy doesn't work. It's that you don't have the discipline emotionally to handle it, to be able to use it effectively. Does that make sense? All right, guys. Anyway, I got to get out of here. I got a lot of stuff to get in here, but a lot of great upgrades coming. Again, with Beards and Bitcoin. If you guys aren't watching that, make sure you're watching that on Wednesdays. or watch the recording afterward. And we try to have a good time with it. We try to have a lot of fun, trying to not make it stodgy and boring and whatever. I think most people kind of do that. But we really focus on, a lot of stuff that many times people aren't thinking about, and how they may potentially add into why not you should look at Bitcoin a certain way. And what particular, and that's the one we don't really talk a lot about technicals. We actually look a lot more at the fundamentals in the news, and we kind of say, well, if you're looking at this, what does this maybe mean? Where does this maybe lead in terms of future adoption, stuff like that? So make sure you guys are checking it out. We do that at 11 a.m. Central, 12 p.m. Eastern on Wednesdays on this channel. And then, of course, we do this. I do this every week here. Let me see. What's next week? Next week is the 20th, right? Yeah, next week is the 20th. Oh, we'll be in here on the Fridays. Yeah. We just won't have Beards and Bitcoin on the 25th. That's 2 Wednesdays from now. We won't have that then. The guys are talking about maybe doing some kind of giveaway or something on January 1st to see which one of y'all show up during the live stream that aren't hungover from the previous night before, the New Year's Eve. So I'm going to talk with them about that, and we'll talk more about that, I guess, this coming Wednesday. As always, guys, hit the thumbs up, hit the like, leave a comment. Appreciate it. If you guys have any issue with the volume, let me know with my mic. I had somebody mentioning last Wednesday that the mic was really terrible, and I've listened to the video. I can't hear what they're saying about it is wrong with it. I listened to the other guy's mic, same thing. So if you guys could, let me know if there's been an issue with the mic here. I'd really appreciate it. I'm going to potentially try a different mic next week just to see. But, again, guys, we're always trying to make this stuff as accessible for you guys as possible, right? What do you think about Ethereum? Ethereum's going to continue to go up. Yeah. I don't think there's any reason why it shouldn't hit $6,000, $7,000 at least this cycle. So, he's going up. Is it going to unseat Bitcoin? No, it's something different than Bitcoin. But yeah. Let me see here. I think you should go black on the chart. Nope, not doing it. I'm using this kind of cream color. It's not really white. It's an off eggshell type white. So it's not so hard on the eyes, but I'm old. I'm used to black and white charts, and I'm just going to do that, darn it. But let me see here. Yeah, so there we go. That'll be it. Join us. Go to texaswestcapital.com, see what we have to offer. Guys, it's only $97. Try it for 1 month. If you decide after 1 month it's not for you, that's great. But I'll tell you what, during that 1 month, if you really get in there and study the stuff that's there, you're going to be so much further ahead than you are today. So give it a try. Check it out. I'm not here to keep you in there if you don't want to be. We make it easy to leave. You just go into your account and hit cancel, and it'll cancel, your account at the end of the period, and you can move on. I don't want people in there who don't want to be in there. I'm not, that isn't the way we work. So, you can learn so much about even this stuff. I'm talking about the risk management, whatever. Learn about that if anything. It'll put you eons ahead of where you are right now in your trading, even if you're moderately profitable right now. I guarantee coming in there is going to, if you pay attention, you really listen and you focus and, you practice that stuff, it's really going to help you change the way in which you're seeing the markets to become more successful. Okay. So anyway, again, always appreciate you guys showing up as always. Remember, the only thing you control is how much you lose. Please keep working on your risk management. I really hope you all have an amazing weekend. Hey guys, listen, you got 12 more sleeps till Christmas. 12 more. Some of us, and when I say some of us, I mean me, some of us, still have Christmas shopping to do. It is what it is. I hope you guys are done with yours though, all right? Again, as always, remember the only thing you control is how much you lose. Please keep working on that risk management. And it looks like Andrew's got some trade alerts coming in. So if you're in the group coaching there in the Traders Club, I guess be looking for those. I got a few more trades that I think I'm going to pop in there today too. I've got 2 that I just added yesterday. I've got a couple more I think I want to pop in there today. So we'll get that. Y'all trade safe. Have a great weekend. We'll see y'all next time. Take care.